Hi there, this is Tantan. Today we're talking about the oil price surge. Due to the unprecedented weather in the US, there's a close in the operation of these oil refineries. Moreover, there is increasing tension in the Middle East that cause supply to drop. However, some investors and analysts may point out that there's a shift in environmentally friendly fuel. This is true, but it will take a while before we start adopting the use of these environmentally friendly fuels. Hence, there will always be a need for oil until there is a complete shift to cleaner fuel. So in today's video, we'll be talking about whether the price of crude oil will continue to increase and will we return to the $70 to $80 per barrel point. Before we continue, please smash the like button, and if you'd like to see more such videos, please subscribe to this channel. Firstly, we'll be talking about the winter storm in Texas. The Texas winter storm is expected to push gasoline prices up across the US by around 10 cents per gallon within the next couple of days. That follows a 5 cents per gallon jump in unleaded gasoline in the last week that drove the national average to $2.51 per gallon, about 7 cents higher than that a year ago, according to AIA. Power outage and freezing weather in the south has wreaked havoc on the oil and gas production centers in Texas. Refineries have also been cutting back on production and are shutting down due to lack of power and to preserve electricity for the public. There were more than 4 million people without power in Texas as of Tuesday afternoon, according to NBC News. President of Liberal Oil Associates Andy Depot said that several refineries shut down due to lack of natural gas and the electricity shortfall, including Montero in Port Arthur, Texas, largest refinery in the US. The rise in gasoline prices has been the biggest contributor to consumer inflation. In the January Consumer Price Index, the gasoline index rose 7.4%, while overall price rose just 0.3%. Gasoline prices have been rising with the cost of oil, which is up 23% since the beginning of the year. Tom Close, global head of energy analysis at Oil Price Information Service, expects that about 4 million barrels of refinery capacity are offline in Texas and other states. Total US capacity is about 18 million barrels, and the industry was operating at around 80% capacity before the storm, he said. He also expects the high price of the year to be around $2.80 per barrel ahead of the summer driving season. He also said that the demand is down about 15% from last year, but by late March, demand this year will be much higher. During last year's pandemic shutdown, demand dropped sharply starting in the week of March 27. The jump in gasoline price could be greater if oil begins to move higher. Secondly, we'll be looking at the rising tension in the Middle East. As the Middle East is one of the world's highest suppliers of crude oil, any conflict could drop the supply of crude oil. Oil prices rose to the highest in more than a year on last Monday after a Saudi-led coalition fight in Yemen said it intercepted an explosive-laden drone fired by the Iran-aligned Houthi group, raising fear of fresh Middle East tensions. The Saudi-led coalition fighting in Yemen said late on Sunday it intercepted and destroyed an explosive-laden drone fired by the Iran towards the kingdom, state TV reports. Due to this conflict, there's a high chance that there will be a drop in the supply of crude oil, which could hinder the recovery of the global economy. Next, we'll be looking at how OPEC tries to control the supply and demand of crude oil. Rather than asking its members to increase the supply, OPEC decided to maintain its oil policy. OPEC maintained its oil output policy at a meeting on last Wednesday as the price of crude hits its highest in almost a year, a sign that deep supply cuts are draining inventory despite an uncertain outlook for demand recovery. Oil has rallied from historic lows hit last year as the pandemic hit demands. thanks to record output cuts by OPEC. The OPEC panel made no mention of changing its oil policy, which called for most members to hold supply steady. In February, and the top exporter Saudi Arabia to cut output voluntarily by 1 million barrels per day this month and next. Due to this decision, there's a cap on the supply while demand is increasing. Therefore, the oil price tends to go higher. Finally, we'll be talking about how some analysts are feeling about the rise of crude oil prices. Oil climbed on last Friday, surpassing the high set earlier this week and notching a fresh 13-month peak. However, after a 23% rally so far this year, one top energy expert warned that the commodity may have gone ahead of itself. Quote, "My personal view is that the price is 240 and that it doesn't warrant a WTI price of greater than $58. End quote. Regional Mayor, Global and US Head of Energy for KPMG told CNBC Trading News on last Thursday. Mayer is seeing positive signs that the market condition back higher prices than the lows seen last year, though. Lower demand and fears of prolonged lockdown had in April 20 turned one crude oil futures contract negative for the first time in history. US stockpile declined to their lowest level in 11 months last week. Meanwhile, OPEC has kept its supplies in February, and Saudi Arabia will reduce its production by 1 million barrels a day for the next few months. In conclusion, I strongly feel that crude oil prices have risen too much ahead of itself. Moreover, the global economy is heading in towards an environmentally friendly and self-sustaining economy, so there isn't a huge demand for crude oil in the future. Hence, there's no reason why crude oil prices are so high. If any of you have any opinion to explain why crude oil prices should be this high, please comment in the comment section below. I would like to start this discussion with you guys. With that, thank you, have a nice day. Goodbye.